Hi students, so this lecture for BBA 4th sem on corporate accounting, and from last two classes we saw one problem which is related to the Arpita Limited and the Anusha Limited, and we solved the what's the purchase consideration related to the Arpita Limited and the Anusha Limited. Okay, so now we will see in this session what's the balance sheets amalgamated, the balance sheet of the Arpita Limited, the Anusha Limited of the Akshay Limited. Okay, so now in this problem the Arpita Limited's as well as the Anusha's Limited, the balance sheet is given now, so we have to combine that, we have to amalgamate that into the Akshay Limited. Okay, so now in last class we solved the this we means ascertained the what's the purchase considerations under of the Arpita Limited as well as the purchase consideration of the what's the Anusha Limited. Okay, so now see this balance sheet of Akshay Limited as on 31st 3 2013. Okay, so first of all, while preparing this balance sheet, no, whatever this balance sheet is there, okay, so as it is without figures, okay, without figures, whatever this is there, all this we have to pass. Okay, we have to pass in the balance sheet. Okay, so without these figures, only the figures. Okay, so whatever this equity and liabilities, shareholders fund, share capital, reserve and surplus, all these things we have to put in this new what's the balance sheet. Okay, so now see shareholders fund. Okay, shareholders fund, this is like this, we have to draw the vertical format, we have to prepare the balance sheet. Okay, balance sheet of Akshay Limited as on 31st 3 2013, the particular column, note column and the amount column. Okay, so now first heading is what's equity and liabilities, under that shareholders fund. Okay, under that shareholders fund, share capital. Okay, so share capital, note number 1, note number means what it is, working note, we prepare that. Okay, so now see what's will the working notes in the while purchase consideration. Okay, we assert in the purchase consideration of the what's the Arpita Limited 1,72,000, no. Okay, and the shares, how many shares are there, 17,200 shares are there. Okay, so and what's the purchase consideration of the Anusha Limited, what's the 1,20,000, how many, 1,20,000, and so shares, how many shares are there, means 12,000 shares are there. Okay, so this 12,000 shares plus this 17,200 shares. Okay, so the into multiply 10. Okay, so because each share price is rupees 10, so now see how it's working. Working note, note number 1 related to the share capital, 29,200 shares are there. So now how it's a 29,200 shares, 17,200 plus 12,000, total is what's 29,700. Okay, and the equity shares of each share price is rupees 10. Okay, so this 29,200 into 10, it's a 2,92,000. Now so we put into the balance sheet 2,92,000 in front of the share capital. Okay, next reserve and surplus. Okay, so there is a no any reserve and surplus. Okay, so next non-current liabilities, debentures. Okay, so debentures is only 40,000. How it's a debentures rupees 40,000, because here what's the debentures is rupees what's only for the Arpita Limited is the 40,000 debentures are there. Okay, 40,000 debentures are there, so these 40,000 we have to take as it is. Okay, so next just see the current liabilities, trade payable. Okay, so for this purpose working note is there. Okay, so note number 2, just see here working note number 2, trade payable, creditors in bracket 20,000 plus 28,000, the total is a 48,000. Okay, so how it's a 48,000 is 20,000 plus 28,000. So in the problem, okay, in the problem in the balance sheet, now see the creditors, just see here current liabilities, trade payables, creditors 20,000 plus 28,000, the total is what's the 48,000. Okay, so this is the 48,000. next is what's this is the balance sheet. Okay, so balance sheets of the equity and liabilities are the over. Okay, equities and the liabilities are the over. Now so now make it total 2,92,000 plus 40,000 plus 48,000, the total is what's the liability side is the 3,80,000. Okay, so now see the asset side, second head which is the assets. Okay, so non-current assets, non-current assets in that tangible fixed assets. Okay, what's the tangible fixed assets? And note number 3. Okay, so now see note number 3. What's the tangible fixed assets? Machinery 1,28,000 plus 1,08,000, the total is what's 2,36,000. Okay, so now how it came from 1,20,000, how it came 1,28,000 and as well as 1,08,000. So now see here, while calculating consideration, okay, purchase considerations, what's the assets value of the as machinery value of the what's the Arpita Limited is 1,28,000, as well as what's the value of the machinery for the Anusha Limited 1,08,000. Okay, so this 1,36,000 plus 1,08,000, the total is what's the 2,36,000. Is it clear? Okay, so now see intangible fixed assets and nothing but what is the goodwill. Okay, so goodwill is rupees 40,000. So there is no any working note, we note there is no any note, so there it means not working note. Okay, so directly what is whatever the book values is there, this 40,000 as it is we have to take. Okay, so now see this tangible fixed assets, and in the what's here in the note, in the note, first note, okay, the assets of liabilities of Arpita Limited are to be taken over at book values except goodwill, machinery and stock, which are to be valued at rupees 40,000. Okay, so this 40,000 is nothing but the goodwill. Okay, so this goodwill as it is we have to take as a average value. Okay, so taken the goodwill rupees 40,000. Next, current stock, current assets stock, note number 4, rupees 57,600. Okay, so now see the note number 4, which is the 3,600 plus 21,600, the total is what's 57,600. Okay, so see here 57,600. So next, trade receivable, note number 5th, note number 5th. Okay, so now see this trade receivables for the debtors. Okay, and the debtors value is 16,000 for the Arpita Limited and 14,400 for the Anusha Limited. The total is what's 30,400. Okay, so here 30,400 is finished. Next, cash, note number 6, and what's the amount? 16,000. Now it's how it's 16,000, cash 12,000 plus 4,000, total is what's the 16,000. Okay, so now all the assets also over. So now make the total of the assets 2,36,000 plus 40,000 plus 57,600 plus 30,400 plus 16,000, total is what's 3,80,000. Okay, so now it's a tally. Liability side also 3,80,000 as well as the in the asset so 3,80,000. Okay, so like this you have to solve the problem. Only in this problem what's the mentioned, what we have to calculate, only the amalgamated is in what's the book values, prepare the amalgamated balance sheet. Okay, so only in this problem we have to prepare the balance sheet. Okay, and we prepared that balance sheet. Okay, so this is the purchase considerations for the Arpita Limited. Okay, as well as this is the, and this one is the purchase consideration for what's the Anusha Limited, and this is the balance sheet. Okay, so I hope you will be the understand, and all of you note this problem on your notebook. Okay, so if you have any doubt with this problem, you can contact me. Thank you.